So, hello everybody, thanks for watching the 36th Berlin Real Estate Talk. Today we're going to talk, of course, in English and in German. Today our guest is the lawyer, Mr. Volker Mauch. Hi, Volker.
Hi, Achim.
Nice for having you tonight. I think taxes in Germany, especially if you're a property owner, if you wish to buy, if you wish to sell, or if you wish to rent out, is a big topic. So that's why we have decided to do this little webinar today. So Volker, let's quickly start maybe with the English section, because I think we have a lot of English clients tonight, and we also have a lot of questions in English. So Volker, maybe just explain to you, you are partner at the law firm VPMK.
Yeah, exactly.
Since how many years, if I may ask?
Since 24 years.
24 years. So. What is the main expertise? What are you doing?
Well, we are focusing on international clients. Yeah. So on the one side, we accompany their investments, so real estate mostly, but also other investments. And the other part is residence and work permits. Okay. So that's what we do mostly.
Okay. What kind of typical client do you usually serve?
Well, I'm working in the real estate department, so I usually serve people who buy real estate in Germany. Mm-hmm. Yeah, who as a pension plan or for investment. So that's my main job, to make that efficient and secure.
So your job is to guide the clients through the process?
Yeah, exactly.
Okay, but you only deal with German properties, is this correct?
Yeah, we're dealing only with German properties, because otherwise we have different jurisdictions. We are part of a larger group of European lawyers, so if there is something abroad, we can help find the right attorney for that, but we directly only consult about German law.
Okay. So maybe for you who are watching tonight, I think we had a couple of questions about different countries in Europe. So of course we will not cover other countries except Germany. So maybe that's something you should be aware of. Volker, how many clients have you served in the past? Just a rough figure, what do you think?
For the investments, I mean, I'm not counting them all the time, but I would say like 1,200 or something over the last 7-8 years.
And how do most clients find you?
Well, there's a lot of clients now who come by word of mouth. Then it's often that we get recommended by someone involved in the acquisition process. Yeah, it's sometimes broker, it's sometimes the financing brokers, and again, there's a big part of the clients who come by recommendations from other people who got our service when they purchased. Okay.
So the topic today is taxes. Yeah. I think we did another video and we were talking about the acquisition process, how it works. So today we're going to cover taxes, which I think is one of the most, at the moment these days, one of the most asked questions, especially for landlords and people who already have a property in Germany. Yeah. And then, of course, we have people who are just in the process of deciding to invest in Germany. And of course, they might come from other countries where they have no income tax, or they have lower income tax, a completely different tax regime. So what are the main taxes people should be aware of?
Well, we talk about taxes because no one likes to pay taxes, right? The German income tax usually has the percentages, don't really sound attractive, but actually the system is not so bad. But I will start one by one. So usually the first tax that our clients get in contact with is the real estate acquisition tax. Yeah, which is the Grunderwerbsteuer. Mm-hmm. So that is a regional tax, and it's the percentage of it depends on where the property is that you're purchasing. It's a one-time tax, and usually it's paid by the buyer. Yeah, so the clients usually just get in contact with it once when they purchase the property. When they sell, then usually the new buyer is going to pay for it. Mm-hmm. The other tax that they get in contact with, and that is often question of consultation, is the taxes they pay on rental income when they rent out property. In Germany, that is subject to income tax. And because when our clients don't have a residence in Germany, then they are only limited taxable. That means only the German income is subject to German income tax, which also means that they don't have the free amounts. Yeah? In German, someone who lives here has a free amount of roughly 10,000 euros per year, which he doesn't have to tax. If you don't live here, you don't have that free amount. So you start paying taxes on your income from the first profit euro. But before you reach that profit euro, you deduct actually quite a few things. So you deduct the costs, the interest of a mortgage that you use to acquire the property. And what you, of course, you deduct all other costs that are related to the property, but you also deduct depreciation. Yeah, so that's usually 2% on the building value, and that brings down the profit that is really taxable quite a bit. Yeah, so after applying that, the tax rate of it's 14 to 45% progressive tax rate is actually not that bad anymore. Actually,
can you say again the tax rate?
14 to 45.
Okay.
I mean the 45 are coming really very late, but 14 to 42 is the standard tax rates. And as I said, the amount that is not taxed at all, because you can reduce the taxable profit by depreciation and by interest, is actually quite high. So the taxes that our clients usually see are not that high. Yeah. Another tax that matters for many of them is when they sell the property. So that is also in Germany income tax. There are a couple of possibilities to sell property tax-free, so you don't pay any tax on it. But if you sell it without a tax exemption, then this can be quite hefty because you have the progressive tax rate again. Yeah. That's why it's so important to sell it under these tax exemptions, because that really pays off. And then the last two taxes, one is the ground tax, which is it's more like a community fee in a way, because it's also not that high and it's also regional, and it's at the moment in the process of being restructured, but it's not such a high amount, can also be transferred to tenants. And the last tax that matters is inheritance and gift tax, which exists, which is structured depending on the relation between the person who gets the inheritance and the one who deceased. Yeah, so that's kind of the 5 taxes.
Let's talk about the tax rate. Yeah. So we have different kind of taxes, but we also have different amounts. Maybe we just give an example. So we have, let's say, a client who wants to purchase a property, 500,000 euros, or let's say 100,000 euros. What kind of taxes he or she has to be aware of?
Well, purchasing the property, first of all, the property acquisition tax. Yeah. So yeah, 5%, 6.5%, 3.5%, depending where you are. Which
province?
Yeah. Yeah. And then after that, it doesn't really matter. I mean, for the ongoing rent tax on rental income, it doesn't really matter how much the property has cost. There it depends how much profit the client makes. And the cost, of course, comes a little bit in for the depreciation, for how much you can write off. And then when you sell again, then of course it depends for how much you sell. So the roughly said, the price for which you sell it minus what you paid for it after depreciation, that is the profit. And then you have to pay taxes on that if you're not fall into one of these tax exempted categories. Yeah.
Okay. What are the tax exempted?
Yeah, maybe I put it here. So the tax exempted categories. I mean, the most known one is if you own a property as a private person for 10 years, then you can sell it without paying taxes on just owning it. That these 10 years start from the time where you both sign the purchase contract. And then they end basically when the next purchase contract is being signed. And these 10 years are for private people only. So if you trade a lot of properties, then you may not be considered private anymore. That's a bit an individual decision you have to look really at the specific case. The rule of thumb is like not selling more than 3 units in 5 years. But that's a rule of thumb. That's not in stone. And so this is the main exemption, and then there's another exemption. Basically, if you have used the property for yourself for a certain amount of time, means 3 uninterrupted within 3 calendar years, or if you have used it from the moment you acquired it until you sell it for yourself. So that can be even less than these 3 years.
Okay.
Yeah. Then you also are tax exempted with the profit.
Can you explain the last bit again? Because I think that's very important.
Well, for example, if you have purchased a property and you never rented it out, that's basically it. So you purchased a property, you never rented it out, you want to use it for yourself. The legal tax is that you have to have used it for your own living purposes. Yeah. What is required to prove that is a bit different. We've seen different cases. We've seen cases where it was enough to basically show that it hadn't been rented out. But sometimes they also want to see more, like you really lived in it. Yeah, some flight tickets, a bed, some furniture.
Yeah.
But in general, if you can, there's no minimum time for how long you have to have used it, as long as you have never rented it out.
Okay.
Yeah? So that's the.
So what happens if I buy a property off plan from a developer?
Yeah.
It's completed, and I live there for a week or 2 weeks, and then I don't know, something happens, COVID happened, I can't use it anymore, or my job, the company doesn't exist anymore in Germany, and I need to live elsewhere. I then could sell it tax-free. Is this correct?
Exactly.
Okay. Yeah. And then the profit will be not being taxed in Germany, but it might be taxed in the country I reside then, right?
Yeah, because you may be unlimited taxable in another country, and they may look at this as taxable income. Yeah, but that depends very much on the country you live in.
Okay.
Yeah? Some countries don't ask for any taxes on real estate, and then of course this is exempted as well. Others do, and then it may be part of your normal.
Yeah. We have a lot of clients from the UK, Ireland, the Emirates, China. Do you know a few examples?
No, I don't know for each country. I guess it's quite different between. I think Hong Kong does not tax on profits from real estate in Singapore, but don't.
So that's something you might ask your accountant back in the country you're living in and you're taxing in. I just know by experience that it's always good to speak to your local accountant where you live in, and of course to your local solicitor in Germany or attorney at law to make sure that you are basically safe off. So we have a couple of questions from you. If there are no German questions or English questions, please, if you couldn't follow because it's all in English, don't worry. We also talk about this in German shortly. I think you speak more languages than I do.
I definitely do speak German as well.
Yes, I think you speak very well German, Volker. He is German. Okay, great. So there's one big topic. So if you buy a property from a developer and you decide to sell it, we just have covered that one, this might be tax-free under certain circumstances within Germany. What do I need to do? Do I have to call the taxman? How do I do this? Do I have to make a tax return? How does it work?
Well, you have to, quite often you have to make a tax return because the tax authorities here now are very alert about the whole thing. So if you make a profit that is taxable, you have to, of course, make a tax return. But nowadays, the tax authorities are actually quite aware of when foreigners are selling properties. So they usually take a part of the purchase proceeds right away and wait until you declare that why this is taxable or not taxable.
Okay.
So this is the way how you usually have to do it. But otherwise, if you don't have to pay taxes, then there's usually no need to make a tax return.
Okay.
If you have income from rent, for example, you have to make an annual tax return, and if you sell it, then after these years, then you also declare the sale in the tax return.
Okay. If you have 1, 2, 3 apartments in Germany, what kind of tax do I have to consider as a?
It's always income tax.
Yeah.
There's of course also the ground tax, but that is basically you get it automatically transferred to your administration, and they pass it on to the tenant.
Yeah.
But if you have 1 through 3, it's all one declaration.
Yeah.
It's a bit separated for the individual units, especially if they're in different buildings. And then you declare the...
So let's say I have 3 apartments, 300,000 euros when I bought it. I paid in Berlin 6% stamp duty, which is 18,000 euros, right? And then I have another one, the rental income. The rental income is, I don't know, let's say 3,000 euros rental income.
Okay, for the stamp duty, you don't have to make a declaration. That comes automatic. Yeah. Okay. So you sign the contract, that goes directly from the notary to the tax authorities, and they send you the bill, basically.
Right away.
Just there's no declaration necessary.
Okay.
That comes because it's also very simple.
It's only on the purchase price.
It's only the purchase price. There's no deductions for expenses or anything. It is the purchase price. Yeah. Period. Okay. It can sometimes be on building costs if they're very closely related, but that's really a special case now. For the income tax, it works that you are obliged to make a declaration where you show what you received, what you had expenses, and if you don't do that, then the tax authorities estimate.
Okay.
So,
but if I have rental income and I do have to make a tax return, this is written in the law, isn't it?
Yeah. You have to make a tax declaration if you do have rental income.
Yes. Okay. What kind of tax? I mean, if I have 1 apartment in Germany, or maybe 2 or 3, any idea?
What do you mean the amount?
Yes.
Oh, well, it depends on the profit. I mean, it depends on you can have 1 apartment and make 10,000 or 20,000 or 30,000 a year. You can have 5 and still make nothing. So, I mean, it really depends the tax rate depends on how much profit you make. It starts at 14%, and then it goes gradually up. And you reach the 42%, somewhere around 50,000 euros in a year of rental income. But that's not the average then, right? That's the last euro then that gets taxed with that. Yeah. And after that, it continues pretty flat until it jumps another 3, and then it continues flat. Okay. So that's a progressive system.
Okay. Aber ein Problem? Alles gut? Okay. Good. Sorry, I just thought we have a technical problem. No, fine. Okay, so we have the progressive tax rate, which I think is now understood. I'm not sure if it's in the country you're living in, similar progressive tax rates, but I think in Europe it's quite maybe accepted.
Yeah, I think what's special about the German progressive tax rate is that it's really really very finely tuned, goes up very often. Many countries have more like 3-4 steps. Yeah. But in Germany, it really goes, which also makes it almost impossible to calculate it without a program. Yeah. But a rough idea, of course.
So if I'm a client and I do own a property in Germany, how easy is it to find an accountant? Do I just contact you in your law firm, or how does it work?
Well, you can contact us because we offer that for this specific type of clients, because we have seen that it's just many of the tax advisors are not so familiar with this type of declaration, but also have really trouble communicating with the client what they have done, what they could deduct, what they could change, and it becomes often a very rough declaration then. But you should pick someone who speaks, of course, your language, and who has some experience with international cases, which many in the big cities now do. Yeah, I mean, no doubt about that.
Yeah, for us in our management company at Black Label Property Management, we have, I would say, 600-700 international clients where we manage their apartments, and all of them have to do a tax return. And of course, we strongly advise to do that. I cannot promise or guarantee that all of them are doing that, because we cannot control this. This is their decision. You are the owner. What we do as a management company, we do, of course, collect the rent, deduct all the costs, and then we pass it on to you, which is the profit, and then it's your decision what you're going to do with the profit, of course. However, if you do not make a tax return on a yearly basis, and then you decide after a couple of years to sell the apartment, I mean, I'm sure if you have seen the property prices in the past 5, 6, 7, 8, 9, 10 years, you have seen different prices 10 years ago and 5 years ago, and of course you might have made a considerable profit, and then you decide to sell the apartment, and then you end up with us selling the apartment, and then sometimes it's a bit late to do that tax return. So what happens then?
Then you pay extra. Just as simple as that. I mean, usually for foreigners, I mean, in theory, it is tax fraud if you don't declare in a certain amount of time. But I don't have the impression that they're especially aggressive. But they do charge you the interest. They do charge you the delay fees. Yeah, and that becomes quite hefty. Yeah. So if they can really prove, or it's pretty obvious that you really try to evade the taxes, then it might become worse. But for the I just didn't know, I thought it was so little kind of situation, they will just charge you some extra fees, which can be unpleasant enough. And the thing is that, I mean, we were doing that now since quite a while, and what we see is that the tax authorities have gotten so much faster with finding, with seizing these purchase prices when a foreigner is involved. They're really quick with that now. I remember that started like 5-6 years ago, and it was really a rare case. And now it's basically whenever there is some kind of a possibility that there's taxes, they're very quick and seize it and make you declare. Of course, if it's obvious that there will be no taxes because they can see you have it since 10 years, that you don't have many, then they often don't. But in other cases, I find it goes really quick now.
I have to confirm this. This is exactly what I experienced. A couple of years ago, we had it once a year, twice a year. And now we have it on every second transaction when you do not do a tax return.
So the chance that you will just slip through, I think, are really small now. So I wouldn't recommend that. I wouldn't recommend that.
Okay. We have a question on the audience. On rental return taxes, is it after capital return or on the first rental income?
Not sure I understand the question.
Me neither. Maybe just on rental return. Is it after capital return? Okay. I think you know what I think she wants to know if it's the net profit after rental return or if you can deduct the interest rates.
You can deduct the interest, but you cannot deduct the repayment of the loan. So if you, let's say you bought a property for 100,000 and you have 50,000 mortgage, for which you pay, let's say, 2,000 euros a year in interest, or that's actually a bit much, but now 2,000 euros a year in interest. These 2,000 and 3,000 per year you pay back. The 2,000 you can deduct, if it's clearly related to the purchase. The 3,000 which you repay to the bank, you can't, because that's obviously makes you richer. Because
it's creating wealth.
I
hope we responded to your question properly. If not, please rephrase your question. So I think there is also another way of taxes. I think maybe quickly cover that one. Setting up companies. There are different ways. I think you're also offering that service, especially if someone wants to buy a couple of apartments.
You can. I mean, you can of course also purchase the property with an SPV. We call it special purchase vehicle. Which is a company that is created for that one purpose. There are pros and cons to that. So it really depends a little bit what you're doing. If you buy a lot of properties, then the chances that you will be seen as a private investor may be smaller, especially if you want to have the possibility to sell them fairly quick. And then you lose this possibility to sell tax-free within 10 years. And then you might want to look at something that has a better tax rate, and the GmbH, the limited liability companies in general have a fairly low tax rate, 15% plus the solidarity tax, so something a bit more. But then you have to see that when the profit is transferred, there's another tax usually to the shareholders.
So we have, if you take away the solidarity tax, we have 15% taxes if I buy the apartments or the houses through a special purpose legal company, SPV, rather than 30% or maybe 40%. It depends on the profit you are making.
On the profit, exactly. So if you want to sell within a short, but then again, the GmbH has the money, and if they then give the money to their shareholders, then they have to take taxes again, income tax, withhold that.
If there is a holding company overseas,
that's for example one possibility. That can allow you to transfer it. But that is really, you have to really look at the concept that this really works.
Yes.
But
Okay, but that's something you're your law firm is also offering as a
absolutely.
service.
Yeah,
Yes.
especially for, as we said, for larger investments.
Yeah.
We offer to set up these SPVs.
What kind of large investments do you mean? From what level you start?
Usually, I mean, it more depends. I mean, it's not only the size, it also depends on what you want to do with it. If you say, okay, I want to be flexible the whole time, I want to be able to sell it after 3 years, then this comes into the focus.
Yeah.
If you buy, I don't know, 10, 12 apartments, then the question is really, are you still able to get these tax exemptions for private individuals? Is that likely? It's always looking in the future. It's always a perspective, a plan that you have there. So you have to see whether that makes really sense in that case and what you're planning to do. But yeah, it's definitely worth discussing it then and thinking about that.
Perfect. I have a question from a client up front. Very simple, straightforward question. As a first-time foreign property owner in Germany, how could I get the tax ID to file the tax return?
Usually through your consultant, which is what I would say. You have to you apply for it, and if you can't get the tax ID, I do not recommend that you make the tax declaration yourself. So I mean, if you have certain German language knowledge, then of course you could do it yourself. But otherwise, your accountant or we would do it for you.
Okay. I have another question. Do I have to pay taxes if my rental income is less than 400 euros and I'm not living in Germany?
Yeah, that's what I said before. There's no free amount for you if you don't have a residence in Germany, if you're not unlimited taxable. So then you will have to pay taxes on the first euro, but it's going to be really low because you're going to be very close to the 14%. And actually, if you only have 480, I would really have a closer look whether you really have profit or whether you're not maybe have something to write off to eliminate that profit as well.
Okay. We have also a couple of questions on the way to raise a mortgage, which I highly recommend you watch one of our other videos we did with Martin, the finance broker. However, I think you already covered that big topic is the depreciation, and of course you can write off the interests if you pay taxes. But if you are living in that apartment, you cannot write off the interest rates. Is that correct? If you're not renting it out?
Well, you don't have profit. You have nothing.
Yes.
You have no income, so there's nothing
exactly
to tax. There's nothing to write off.
Okay.
Yeah.
What's happening with Airbnb and all these kind of things if you do the subletting? Yeah.
Well, Airbnb has some special problems. So Airbnb is there's a lot of possible little bumps in Airbnb rental. Apart from that it's very restricted from the city side usually. There's in addition you have a question of VAT and commercial tax. Yeah. So because the rentals are usually very short, it's usually subject to VAT, which no one does. Which could cause quite some tax claims afterwards, and the commercial tax also. I mean, it's funny to read what Airbnb often recommends. It's like, oh, you put some orange juice in the fridge and put some bread rolls available. That is exactly what you shouldn't do from a tax perspective, because that is not just renting anymore. That's then turns the whole thing into a service. So in general, I say I'm not a big fan of renting out with Airbnb because I don't really see that it's worth the hassle, the hassle and the possible risks. Yeah.
Okay. We just have a couple of more English questions. I'm from Italy, living and working in Germany. Therefore,
living and working in Germany.
Yeah. Therefore, I declare my income taxes in Germany.
Okay.
If I bought an apartment abroad, for instance, Italy, can I declare the depreciation interest expenses in my tax declaration in Germany, even though the rents are taxed abroad, but cannot deduct them? Wow.
Naja, also wenn hier, also es wird ja in English, yeah. So what you pay taxes on is the profit from an apartment. Yeah?
That's how I read it, yeah.
So you have you're declaring profits from renting.
Yeah.
Yeah? Vermietung und Verpachtung, renting. So this calculation of the profits is you take the income and you deduct the expenses.
Yeah.
So if you don't declare income here, you can't deduct expenses.
Yeah.
So that's very simple. It's also, if you would make a loss, if you declare the taxes and you make a loss, you also cannot simply move the loss to your income from, I don't know, your daily work or something. They are.
I mean, in general terms, the question is a bit odd because in general terms, please correct me if I'm wrong, the taxes on a property are always paid in that country where the property is, not in another country. This is like the rule of thumb, am I correct?
Yeah, I mean, that is the rule of thumb, but it doesn't mean that the country where you are unlimited taxable may not, for example, ask some surplus or it's not necessarily exempted. Yeah.
Okay.
But if you don't declare the income, you will not be able to deduct the expenses, at least not in Germany.
There was a second question, Jenny? Yeah. I might have missed it. I thought the English part should be at 1930. I'm a foreign buying German property. How should I get the tax ID to clear my tax return? And is it up to 5 years to start reporting? So first of all, if you've missed the first part of the webinar tonight, you're completely right. Usually we start with the German section, then move on to the English. But today we had so many English people that we started with the English first. And you can see the whole video on YouTube next week, which you of course can double check what Volker has said. But I think we can also respond to that question for you.
Yeah, I mean, what I recommend is to actually declare the taxes as fast as possible before basically the tax authorities come to you. And if you use a professional for that, they will be able to do it without you having to apply for the tax ID first. Yeah, then you can just do it in one go, and you don't have this risk of them coming to you and basically you can be proactive, because otherwise it just gets more complicated, because you're definitely beyond the tax declaration deadlines here.
Yeah. So I think it's always better to contact your law firm, VPMK, and to make sure, in case you have no tax ID, or to contact a different advisor, whoever you want, but you should take action and get something done.
Yeah.
Okay. Thanks for watching tonight, our 36 Berlin Real Estate Talk. I hope we have covered most of your questions. And if you have further questions, please feel free to contact the law firm vpmk.de. Volker, thank you for joining tonight.
You're very welcome.
And like I've said, if there's any other topics, please feel free to contact us anytime. Thanks for watching and join us for the next webinar.